Okay.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is July 20th, 2022. And today I want to talk about why the $30,000 level in Bitcoin is so important. People don't see why this level is so crucial. And it's literally the linchpin between explosive positive price action and just a regular uptrend that we may be experiencing. I think after 30,000, there's going to be no doubt by most people that we are indeed in a new bull run. If that analysis sounds interesting to you, then watch until the very end. I'm going to start off on the weekly time frame because I want to show you something. Okay, so I'm on the weekly time frame. I've got my EMAs in my exponential moving averages. I use 3. Okay, I use a 21 exponential moving average. That's my fast, quote unquote, right? It's 21 days, the past 21 days, averaging price using a special formula that the EMA uses, okay? And my blue line is my 55 exponential moving average. That basically averages price in 55-day chunks, okay? And then my green line is 144. That's my long, okay? So my short is yellow, my blue is medium, and my green is long. 144-day exponential moving average. Every single one of these numbers are Fibonacci numbers. You all know how important I believe Fibonacci levels and numbers are, okay? So that's why I have them. They're on my charts, not MAs, EMAs. They're more responsive, less lag, okay? So I'm looking at Bitcoin. I'm on the log scale because I'm trying to faithfully represent these big moves in a relatively short amount of time, right, on one chart. And, let's just say, remember we said 24,000 was going to be a pit stop. Well, guess what? We've been around the $24,000 level for a few hours now. And that did prove to be true because on the daily time frame, you can see there's an EMA that's hanging right at 24,000. And we also measured it with our Fibonacci extension tool, and that was a 1618 of our wave 1. So interesting stuff. But I digress. I want to draw your attention to the yellow line, my fast 21 exponential moving average. Okay, and on the weekly chart, that's basically a very, very useful and reliable indicator for market trending. Okay, all these exponential moving averages, they're intended to give you an edge as to what the market's doing, right? Where it's trending. That's the whole point. But the 21, for some reason, and some people use a 20 moving average. Some people use a 21 exponential moving average like me. The 21 seems to be uncanny in its ability to really encapsulate the overall trend of the market. And you can see the 21 really showed you here you're in a bull market, right? Let's see. Let me get my pen. See, you're riding the 21, you lose it, you're in a bear market. You're riding the 21, your positive price action, you lose it, you're in a bear market. And you only start going bullish per se once you regain the 21 exponential moving average and you ride it the length. It's pretty much the length of the bull market. Okay. And so a lot of people even have entire trading systems built around these moving averages. Okay. Especially like the 20 or the 21. Now, we are currently under the 21 exponential moving average. And what I've shown on this channel is there's actually convergence of both the 21 and the 144 exponential moving average, which is what you would call maybe a bearish cross that's forming, right? At 30,000. Okay. And that, I don't really like I mean, I don't use EMAs like, oh, it crossed bearish, it crossed bullish, whatever. Like, that's not my thing. That's not my specialty. Don't ask me that. I don't know. But that's a bearish cross where the slower or the shorter exponential moving average is crossing under the longer term exponential moving average. I know that much is a bearish cross. However, I don't necessarily think it really portends bearish price action because it's at a crucial level. And it's essentially telling me that this is going to be a significant resistance. That's all that's telling me, okay? 30,000 is significant resistance. And I think it's so important because, one, just looking at pure price action, you see that this was exactly for 100 or 450 days when we were in this ABC flat correction, okay? For 450 days, this was essentially our main support. Maybe not for 450 days, maybe for 400 days of the ABC flat correction. We always found support at 30K, by hook or by crook. We came down to these levels. We found support. We found support briefly here, then we lost it, okay? $30,000 would represent a huge reclamation of all of this price action right here, right? This head and shoulders. You're basically reclaiming it at the $30,000 level. Okay, that's number one. Number two, just looking at our exponential moving averages, and this is basically a reflection of price action. It's not different, right? You can see the same thing. And then you can also see that the 55 exponential moving average right here is around 36. And that's where we had some support here at the interstice, if you will, of our double zigzag, right? You have zigzag here, a B wave kind of little interstice. I don't know what you would call that. And then another WXY, okay? And so that's 36. That is also important. So I think as a result of this, what's going to happen is this. We will hit 30K. We will consolidate very briefly. We will shoot up to 36K and come back down and retest the 30K level where our 21 exponential moving average will be retested. And once we retest that, it's off to the races. That's when I expect absolutely mental bullish price action, okay? And I think that we saw something similar here. Look at this. You obviously were in a bear market. You lost your 21 exponential moving average. You lost all your moving averages. You come back. This is March 2020 COVID low, right? You come back. You regain your 21 exponential moving average and you retest it. You take some weeks to retest it, actually. It takes quite a while. It takes, this is the weekly chart. So every bar is a week. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks to retest it. And then once you retest it, it's off to the races, okay? I think I wouldn't be surprised if we experience something like that. I don't know if it's necessarily going to take us 10 weeks to retest our 21 exponential moving average, but it could. It very well could. But that's what I'm seeing. I'm seeing price action come up back above this 30K level, reclaim it and say, okay, we're back. We lost this very important level, right? Where we hit this, head and shoulders pattern and we broke down more or less the height of this pattern. And now the trend has changed. We are reclaiming it officially, coming back above it, consolidating and going. And then in that consolidation, again, that 21 exponential moving average is going to be reclaimed, retested, and then shot off on. Okay, I'm not just seeing this in Bitcoin, I'm seeing this throughout the market. Guys, if you're getting value, please like, share, and subscribe. Would greatly appreciate it. Let's look throughout the market and see if we can't see something similar. Here I'm looking at DODO. This is a small cap altcoin, and I think something similar is likely to happen. We come up to the 21 exponential moving average here. We consolidate a bit. We go up all the way back to the 55 exponential moving average. Here, you're reclaiming significant price action, okay? Because see, here, this was big support. You know this was big support because you have this huge wick here. You were consolidating, you lost it. You're going to come back, reclaim it, bounce, and retest it before moving up. So short term, I'm using DODO as like a kind of like a piggy bank, you know, to pay my short-term bills. Let me just say this. This is clearly a large term, high term, a reversal, high time frame sort of bull trend. And one of the main things you want to do when you see a big trend is get the hell out of the way. If anything, you want to add to your position. You do not want to fade it. You don't want to take profit too early. That's just silly. You know, zoom the hell out. Look and see what you're doing. This is why I'm on the weekly time frame. We're 10 minutes into the video. I haven't dropped down from the weekly time frame. Okay. And I know a lot of people like to, you know, operate on the 4-hourly or the daily at most because people are impatient, but you want to gain perspective, right? I have, you know, in my whole trading company, I have a 3-word strategy. It's patience, perspective, and planning, right? Those 3 things have led to my success. When I do not have any one of those 3 things, I failed. Okay? High time frame analyses are necessary to really develop develop perspective, right? And that also gives you a good plan as to what to do. You can't do that blind. So in DODO, for instance, I'm going to take profit here, not because I want to fade this move, not because I want to be cheeky. It's literally because I trade for a living and this is how I pay my bills. And we've been in a massive downtrend or reversal, and I haven't been trading in and out of the reversal. So I haven't had sort of cash flow for some time. So that's why I'm going to take profit. But for most of my positions, if anything, I'm going to add to them or just leave them the hell alone. Okay, so that's my strategy that I'm sharing with you. How do I delete this? Okay, I'll delete it later. I'm not going to waste your time. Litecoin, I'm seeing something similar. Again, you have this structure that was representative of this 450-day, not this structure right here, this structure, but yeah, you can add this and say, okay, you lost this level, right? And that represented our 450-day correction, right? You lost this level. What you're going to do is you're going to reclaim it. And here in Litecoin, that looks like you're going to hit something like 110, 111. And then I think you're going to consolidate for quite some time on that 21 exponential moving average before heading out. Like, you're not, what happens is people are like, oh, new trend, cool, that means we're going to $1 trillion like tomorrow. No, it doesn't happen that way. Look historically, these things take time. So once you gain, it's kind of like when you're playing a video game, defeating a boss. Like, you gotta defeat the boss and then you move to the next level, and then before you get to the next boss, you go through the next level. It takes some time, right? You're going to gain that 21 exponential moving average. Then this is the level you're reconsolidating before you set up again. And this Litecoin chart is just a trading chart, so it didn't have that much data. So I can't really show you historical data. Let's actually go into the Litecoin chart because it's an important asset. I have the full term Litecoin chart I'm going to show you because I think it's helpful in seeing that. And then we're going to go look at like 1 or 2 more and call it a video. Let's see. I have it here somewhere. Sorry. Let me focus. Litecoin. Let me just do this. Let me not be silly. There we go. Okay. So in Litecoin, you can see the same thing that happened before. Do you see this right here? Let's turn this pen tool on. And you can see right here, a massive change in trend here, right? For this, well, it's a massive change in trend, but this is actually corrective price action, okay? If you think about it. But let's just use this example anyway. This is the impulse in your corrective price action. And so you right here, you regained the 21 exponential moving average, you shot above it, and then you came down, retested it before heading off. Okay, remember, this is the weekly chart. Every bar represents a week of trading. You shot above it, then you kind of lost it, and it took you a good month to 2 months to retest that 21 exponential moving average before darting back off again. Okay, so that's kind of what I'm seeing. Okay, I'm seeing that across the board. Dogecoin, same thing. I think Dogecoin comes to about 15 to 16 cents, retests the 21 exponential moving average for a few weeks, and then darts off. Cardano, I think, is a little different, but same principle. Okay, I think Cardano is going to kind of try and reclaim these levels by hitting close to $1. Okay, that's where the 55 exponential moving average on the weekly time frame is right now. I think Cardano hits $1, and it retests the 21 exponential moving average, which may be around between 75-80 cents for a few weeks, and then goes off. Okay, Ethereum, I think the same thing is going to happen. Ethereum is going to hit maybe 24K. Okay, retest that 21 exponential moving average, which is going to be around the $2,000 mark, and consolidate there and then move on. KDA, same thing. I think KDA goes to like $4.40, retests the 21 exponential moving average, which is going to be around $3.50 for a few weeks, and then moves on. REV, I think it darts up to about 0.0074, retests this 21 exponential moving average, which is going to be around 0.003, and then moves on. Reserve rights, same thing. I think we retest, we test 0.02, so 2 cents, then retest the 21 exponential moving average. That's around a penny, and then moving on. Telcoin, last but not least, I think Telcoin comes up to the 0.0077 region, and then consolidates for a bit, and bounces back off the 21 exponential moving average around the 0.0056 region. So that's my analysis. Hope this was helpful. Hope this was useful. That's why I think Bitcoin is actually targeting 36,000, but then it's going to retest the 30K region, because the 30K region is so vital to the entire market structure. All right. Hope that was helpful. Hope that was useful. Have a great Wednesday, and I'll talk to you guys next week.